Welcome to our special Happy Tax Season edition of Newsmaker. This tax season is especially nerve-wracking because there's so much change in the air, especially in the wake of the fiscal cliff. That debate got a lot of us wondering where we're going to stand this year with our taxes. When it comes to filing taxes for the 2012 year, the changes have less to do with the fiscal cliff outcome. In fact, for most of us here in Michigan, the biggest changes this year will be to our state taxes. And our first guest today is Michelle Gallagher. She's a member of the Michigan Association of CPAs and the owner of Gallagher and Associates in Lansing. And Michelle, let's dive right in because this is so fun and talk about the key changes this year to our deductions on our state income taxes. And the property tax credit has changed significantly this year, making that credit no longer available not to everyone, but to many Michigan taxpayers. Who's affected and how bad is the hit?
Well, many people are going to find a big impact on the property tax credit this year. The big hit is who's going to be hit the hardest are people, the middle class, the Joe taxpayers. Historically, there have been income phase-outs and income limitations over $80,000. Now the credit is going to be reduced to those making under $40,000 to $50,000. So that cuts out a lot of people. Another big change that's happening with the credit is if your taxable value of your home is more than $135,000, you're going to be ousted out of the property tax credit no matter what. So even if somebody has a bad year or maybe a senior has some low income and they're under the $40,000 to $50,000 income, if their house taxable value is over $135,000, they're out of luck. The tax credit's gone for them. Historically, the credit's been up to $1,200, and people are used to getting this refundable credit, $1,200 check in the mail from the state, and that's no longer going to be coming to them for, I'd say, a bulk of our taxpayers here in Michigan.
And when you say phase out, that to me puts in mind, well, if it already started with one group and it's moved to this group, does that mean there's more on the way? Well,
the phase out means if your income is between $40,000 to $50,000, the credit keeps reducing more and more and phases the credit out. Once you reach $50,000 of income, actually it's called total household resources, but most people would say income. But if you are at $50,000, it's phased out entirely. So there's a little range of credit phase out between the 40 and 50, but once you hit $50,000 or your taxable value is over $135,000, no more credit for you.
Oh, wow. And because a lot of us greatly benefit from our charitable deductions we use every year, some of those will not be allowed on our state returns either. Is that true?
That's right. That's another credit that is gone now in 2012. There were wonderful credits for public contributions, community foundations, homeless shelters, food banks, all those sorts of things. And I've had clients over the years have $500, $600 in credits that now are just simply gone.
We can still use this on our federal.
That's right. The federal has not changed at all in the charity, and a lot of people have asked that question. So hopefully folks were still charitable in 2012 to those types of organizations in getting the federal deduction. Just Michigan isn't going to give you the extra kick this year.
Now, I've almost had a nervous breakdown trying to figure out the charitable deductions on the state return. Anyway, you start looking at the book and I get all panicky and itchy and stuff. So is it going to be explained a little better in the book this time so people are going to know what things are changed?
Well, you'll notice on the form when you go to file it this year, the Michigan form in particular, there is no section to take a credit anymore, where historically there's been, if you've made a community foundation, how much was it, here's your credit. It's gone entirely, so people won't see it, which will, many people will ask the question, hey, wait a minute, where'd my credit go? They'll also find when they go to add up that final number at the end and their refund isn't as much, they'll go back to their return last year and think, now, how come I got that last year, not this year? And they'll realize that those charitable credits and also the property tax credits just simply aren't there for them.
That's going to hurt. That is going to hurt. And now, there is another area of concern here, especially in our community. There are a lot of retirees. Pensions are now taxable. Is this affecting everyone who gets a pension?
It doesn't impact everyone, and it depends on your birthday. So if anybody was born before 1946, no change at all. You have no impact. If you were born between 1946 and 1952, you're impacted slightly. If you're a joint filer, $40,000 of your pension will not be taxed in Michigan, but over that will. If you're a single filer, it's $20,000. So if your birthday's in that 46 to 52 year, you do have a little bit of leeway. And then if you were born after 1952, your entire pension is now going to be taxable in Michigan.
Wow.
It's always been on federal, but Michigan has always had an exclusion for pensions, and this has really impacted our seniors and our retirees. And they have not been quiet about it.
No, we have heard some of that, and I think a lot of those taxpayers are going to be prepared mentally for this, but it's still going to be a painful time to file. Now, this fiscal cliff debate, I even hate saying the term because everyone is so tired of hearing about it, but it seemed to have everyone on edge. Even those changes are not going to impact the returns that we filed this year, though, right?
In 2012, they are not going to be impacted. There was some compromises made that essentially extended all the goodies that everybody got historically into 2012. So the fiscal cliff debate really didn't impact the way people will file their 2012. In fact, many of the things they extended permanently, so hopefully we don't have to hear too much about some of those things in the future. But for 12, not a whole lot to worry about with the fiscal cliff.
Okay, and other than the payroll or Social Security tax increase, that takes a little bite out of the bottom line of the take-home pay for a lot of people. But how will that change? How will changes due to that final compromise affect the average taxpayer?
Really, the fiscal cliff is not going to impact most taxpayers. Probably the top 2 to 5% of American taxpayers. The biggest compromise that hit the average taxpayer, the worker, is the payroll tax hit. And people are feeling it. You've been hearing it because it came out of their first paychecks in January. So it's a 2% increase in your payroll tax for all the workers in America. And even someone who makes $50,000, that's $1,000 out of their pocket that they got to pay in now. So that one really hit everybody. On the flip side of it, all of the high income taxpayers are going to, starting in 2013, pay much more in tax. Their income tax is going up. There's Obamacare taxes that are impacting folks. And for the most part, they're not impacting people unless they're making over $450,000. So really not impacting the bulk of America, but certainly a lot of people.
Well, Michelle Gallagher, thank you so much for coming in today. You've been very helpful and very informative for us today.